Out with your numbers yesterday. Sanjiv Sharma, the managing director of the company, joins us now to talk about that. Sanjiv, hi, good morning. Let's start with the margins, which came in at 7.1%, the lowest margins that the company has delivered in the last many quarters. Especially the power grid business saw the margins halving this time around, given the reverse auction. Is pricing becoming a pressure?
For quarter three, I think it's purely due to the margin mix that we had, and we have a wide product portfolio. It's just a function of the margin mix we had during this time.
Sanjiv, hi, good morning. So is it fair to assume that the margins have bottomed out, or is there more downside?
It's not a trend. We are looking at certain orders and contracts which were on the lower margin side. They played out in the revenues in quarter three. It's a result of that.
Okay, so let's get to the future, Sanjiv. How has the ordering been from Power Grid so far? You're seeing any uptick in ordering from state electricity boards, generating companies? Will we see any meaningful growth, basically, going forward?
Well, what we see, we continue to gain orders from Power Grid, expansion of the transmission networks in the country. I think that continues to play through our order books. And also we are selective with the certain state electricity boards wherein we participate quite actively. And there again, I think the contracts are flowing into our books.
So competition has been increasing in the industry. How are you guys placed? Is there a lot of pressure on profitability because of the competition, or is the market size shrinking as well?
Well, from our point of view, we have very healthy backlog. And if you see the margin that we talk about for quarter three, we have some short cycle orders because our portfolio is pretty wide. We have short cycle orders. We have orders which are in the engineer to order area, and we have orders in the systems area. So what we find is that the margins are holding well in the short cycle orders. And so is the case in the system orders, where we are selective in what kind of contracts we go in. So we don't see any margin erosion there. But in the quarter three, as I mentioned before, it's just a matter of the margin mix we had and what we delivered in part of our revenues.
Okay. In the global meet, ABB said that India is a point of interest and they would be looking at M&A. Are you in talks with someone?
Yes, our global CEO, he mentioned that there's an active interest in India in few areas. One is to use ABB India as a global hub and a technology hub, as well as a manufacturing hub. So we are very well entrenched in that area, and I think we are ready, and we are already helping the group in that area. The second area is that India ecosystem is very fertile with a lot of innovations. There are a lot of startups taking place. So our interest has been, especially in the area of digitalization. There are a lot of capabilities here in the country, and also some other areas which are part of our core portfolio. So we have a healthy pipeline of our interests, which we continue to evaluate. And of course, we'll mention to you when we are close to a decision.
You know what, Sanjiv, you sound like an excellent brand ambassador for Make in India. But, well, let me get to some other more duller questions. The earlier target that you mentioned when you gave us guidance was to keep your raw material as a percentage of revenue to around 65%. This time it's 66%. Now, given where commodity prices are you looking to revise this guidance?
I think from the previous announcements, you see, we always kept a corridor for the material cost between 65 to 6%. So we are well within that. And as I mentioned, that if you have the revenue mix, which is on the lower margin, so I think that's another impact that you see. But we have very structured programs on the OPEX side, which continue to give us relief that we maintain the material costs on the right side of the projection that we make, which is between 65 to 66%.
Okay, thank you for joining us, and all the best for the second half of the year. That's the word coming in from ABB. Their margins were under quite